Hello, yeah, thank you very much. I think he was clear. He said, inflation about 45 or 46 times, and price stability was the runner-up to that. He made it very, very clear what his intentions are. There was no equivocating. There's no misunderstanding. He made it short. He made it not so sweet. And I think the market got the message. Mind you, there was a parade of Federal Reserve speakers after the market seemed to misinterpret what he had said. In other words, seeing a pivot rather, quickly compared with what he said on Friday. And right after that, after the market moved up so dramatically, and we had a really big risk-off move in the markets, they came out one after another and just said, this is what is needed. We need more work. And Powell really came in with that. We're going to stay higher for longer. And that was what I think got the market. He didn't say, then we'll stop. He said, we will stay there until we are certain. And that, adds tremendous uncertainty to the market. How long would they stay high? And this is what the market has to get through. And of course, with earnings coming up, you mentioned earnings, this is going to be key because already the estimates have come down. Guidance needs to be positive.
Yeah, Quincy, I've just seen that you're in San Diego, so you're still on Sunday evening, which is thank you for joining us late on Sunday. Look, I saw the bullet of yours, actually, fun enough, I was just looking down about earnings as well. We seem to be in total accord about that as well. But does the current earnings expectations, or do we need to see more from the third quarter, but do the current expectations give us a solid enough platform to start dipping our toe into equity markets if we want to go long or not?
Well, probably not. I mean, you're going to remember this is a global phenomenon. You heard every central banker echo what Powell said. So you're going to see demand come down globally, but there will be companies, perhaps domestically oriented companies, that can offer margins that are still attractive, because after all, that's what the market is looking for. That the margins do not get crushed with the cost of capital rising. So I think that there will be, but I think it's going to be stock specific. And one other thing that's important, the second quarter earnings, the market, because the valuations were lower, the bar was lower, and the market gave many companies a chance to just explain why there were misses, and were prepared to give the companies kind of a positive underpinning. I don't think that's going to happen for the third quarter earnings season. That's going to be quite difficult.
Quincy, can I ask you where rates are going to end up this year? I mean, we heard from Bostic, who's saying we could be about 3.75%. If you look at where we are in Fed funds at this stage, we could be leaping ahead by another 1.25% on some of these rates by the end of the year. That could just be two moves, given the jumbo-sized nature of these rate hikes these days. What are your expectations now for the pathway for the rest of this year and where we end up on a ceiling on rates?
Well, probably around there, although there are many who say it could be 4%. And the Fed itself, says, look, we have to go higher. We must go higher in order to just expunge inflation from the economy, finally. So they may do that, but I think 3.7, 3.8 is probably where we settle. Again, the question is, how long do they wait? We're expecting either 50 basis points or 75. Right now, it's sort of 50-50 for the next meeting. And then after that, the Fed could probably go lower, like 25 or maybe even 50, and then 25 and 25, and then wait. The lag time is, 6 to 7 months before these rate hikes work their way into the economy. So it's going to be hard on the economy, but I think the message was, don't misinterpret what I've said. Listen to what I've said, take it literally. And I think that the market is, he mentioned the 70s where the Federal Reserve went stop and go, and it was a disaster. And he made it clear they are not going to repeat that mistake.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.